Welcome back, YouTube, to my channel, Invest in Yourself. My name is Cameron, and thank you so much for coming to watch another of my videos. Today we're going to have an earnings preview of Alibaba. I'm going to go over three aspects of the company. I hope it provides you great value. First, we're going to go over the computing business, their fintech with Ant Technologies, which they own 33% stake in. And third, will I buy this stock again and add more to my portfolio, in which it's one of my biggest holdings in my account. But let's roll right into it and hope you enjoy the video. Kind of going over a little brief description of what Alibaba does as a business and a company overall. Alibaba is China's biggest online marketplace. It has three major sites, namely Taobao, Tmall, and Alibaba.com. And these sites have 500 million customers on average, along with hosting millions of merchants and businesses. Alibaba reportedly controls roughly two-thirds of the Chinese e-commerce market through Taobao and Tmall. Many of the Wall Street have long been excited about the firm's ability to grow alongside China's middle class. For instance, the middle class could hit 550 million by 2022, according to McKinsey estimates, which is larger than the entire U.S. population by 330 million. Baba's revenue climbed 22% last year, with its core commerce unit, which accounted for 82% of total revenue, up 19%. The firm's annual active consumers reached 726 million, up 15 million sequentially. Meanwhile, with its new mobile app and its new mobile transition for another part of the company, it's reached 22 million for the December quarter to hit 846 million for the 3-month period ending during the June timeframe. Rolling right into the first one, the Alibaba cloud computing business. With like many other tech firm focuses, they have been expanding their cloud computing business, which has climbed 58% over the last quarter to make up 11% of their revenue. Cloud computing has emerged as a key technology to fight against the pandemic in China. This technology has been witnessing higher usage globally as it allows data interoperability in a scalable, cost-efficient way by data collection, processing, and analyzing sharing across platforms. And the 2B report, revenues from the cloud segment are expected to have increased from a year ago, backed by growth in the number of paying customers and higher than usual spending by them, reflecting an increase of usage of the service. As you can see, this cloud is going to continue, cloud service is going to continue to grow annually by annual, and this is another beast concept of their whole fundamental of their business, and one of their main, outside of their e-commerce, main profit growers here is the part of their cloud computing. Rolling into number 2 with Ant Group Technologies and the importance of this group IPO and coming up in the next couple of months or so. With Ant Group Technology, it's a financial service giant that allows Alipay, which is a widely popular mobile app platform that competes alongside Tencent and WeChat Pay. Ant Group announced plans in July to go public with a dual listing in Shanghai and Hong Kong. Alibaba holds a 33% stake in this fintech firm that's set to expand as a part of China's booming digital payment economy. Ant Group has over 900 million users in China for Alipay, but it's offering financial products beyond that, including wealth management and loans to businesses and insurance. Ant Financial was created in 2014 to encompass not just Alipay, but Alibaba's bigger push into financial technology, and has been expanding its reach into everything from wealth management, microloans, and beyond that. It has been focusing selling financial technology and products to enterprise customers. You check it out, and Ant is even recently pivoted focus more on what is called technology services. This is creating financial technology products that can sell enterprise customers for licensing fees. Another big thing, based on the $150 billion market capitalization, Ant represents $19 of Alibaba's American depository shares. That is crazy and shows you how big this fintech company Ant, and with the 33% Alibaba owns of this company, how it could play a huge stake in increasing the overall market capitalization for Alibaba. Last one, guys, on the list we have today is the worries that I have with Alibaba coming up with the earnings, and will I buy more? With the political worries might have weighted on the company's domestic and international growth. Moreover, increasing competition for companies like Amazon and JD, along with others, as well as declaration of growth in the e-commerce market, both domestically and internationally, might have impact on its earnings soon to be reported in this quarter. What we need to do is just tune out some of the noise related to some of these tensions, focusing more on underlying fundamentals with Alibaba. our play on growing this middle class in China. Basically, you're getting all the business that Amazon has at a discount. You're getting e-commerce, cloud, Alipay delivery. They're growing even faster than Amazon and a place 4 times as many people with a slight more attractive multiple. Thing to take in, YouTube, is Baba trades at 6 times forward earnings, and the company was able to meet its annual revenue guidance despite the more challenging economic environment brought on by the pandemic. Alibaba's fiscal 2021 revenue is projected to climb 30%, with fiscal year 2022 expected to come in another 27% higher. With shares in Alibaba up 20% year to date, with this price target, it suggests there could be a 14% upside potential. Alibaba's stock has provided investors a total return of 60% over the past 12 months. And compared to that, with the return of like the S&P 500, it's only returned like 17%. So if we see some weakness in this earnings coming in YouTube and this stock goes down 10, 15%, I think it would be an excellent buy with this stock. Anytime that you can get Alibaba, even at these current prices, I think it's still a good value. Even with the different tensions going on with, us with the tariffs and all the political driven things, I think Alibaba is still a value buy at these prices today. And as you know, I do hold shares in my long-term account, and I continue trying to build this in one of my biggest holdings in the account overall. But again, I hope you like this slide and hope this gives you more value to see if you want to invest into Alibaba's business for the future. Thank you so much, YouTube, again, coming to my channel, and I hope you enjoyed this video and it provides you with a lot of value. Please leave a comment down below if you got any other recommendations of other stocks you want me to kind of do any other kind of previews on. But again, remember, always invest wisely and always invest in yourself. Bye-bye.